Recession? What recession? Economic data today has a lot of market watchers asking that question. It kind of indicated that the U.S. is on firmer footing. Plus, we have the first three-day rally of 2016. Let's bring in Ward McCarthy. He's the chief financial economist at Jefferies and a former Fed head. Also joining us, Sean O'Hara, president of Pacer ETFs. Good to see you both. Ward, the Fed minutes came out and in essence said that they were a little bit nervous, certainly in January, about continuing their rate hikes. And yet today, we got some economic data. We could show some of it here. And among them, we have better industrial production numbers, a little bit of a question on housing starts. But what recession? Is that what you're asking?
There's no recession, and I don't believe we're headed towards a recession. The U.S. economy has proven over and over again that it's extremely resilient through really more crises than I can count since Q3 2009, beginning with the Greek crisis and now going through the latest crisis with China. So the U.S. economy is driven by the service sector that continues to grow and gain strength, and it also is driven by the U.S. consumer, which is also continuing to, that sector is growing because we continue to generate job growth, and consumers also benefit from lower energy costs. So, Liz, we're not going into a recession. We will just continue to be the best economy in the globe. Maybe not as great right now as we'd like it to be, but Q1 is certainly a lot better than Q4.
Okay, well, Sean, you invest no matter what's going on. You figure there's always a trade. Let's talk about a couple of your picks. You like Apple. You like Netflix. Some of these, of course, are the FANG stocks, needless to say. Alphabet, which is Google, the G in FANG. And then some energy sectors. Energy select sector, Spider, and oil is up today. Buffett's making energy plays right and left. Tell us what's behind your thinking here.
Well, Liz, thanks for having us on. We generally like the Qs because it's different than most of the other broad-based indexes. So if you look at the S&P 500 or the Russell 1000 or the Wilshire Large Cap Index, they all focus on sectors and making sure all the sectors are allocated to. The Qs is a large cap broad-based index filled with companies like you talked about, Apple, Netflix, the Google, or what used to be Alphabet, Comcast, Gilead. All names in the fastest growing sectors of the society, and they don't really pay attention to their sector allocations. And what most people don't know today is that the Qs, the NASDAQ 100, are growing their revenue, their earnings, and their dividends at more than double the rate of the S&P 500. So if I were to give you two ways to play the Qs today as a broad-based ETF play, I'd say the QQQ is one. And then one of our products has a little downside protection in it, which would be PTNQ. So both use the same basic broad-based index, but start paying attention to the broad markets and focus on the individual company names within the indexes.
Listen, we've got the closing bell coming up in a second. So Ward says no recession. Sean says invest. We'll put Sean's picks up on Facebook.com/Liz Claman. And let's just let this rally roll.